G'day folks, welcome back to another update for natural gas. Happy New Year. So natural gas has been playing some funny buggers recently with a gap up, and it's in a bullish mode at the moment, and it's looking like a fresh bullish breakout on the lower time frame. So before we go into the charts, make sure you hit that like and subscribe button to make sure you get all the updates. First we'll go to the fundamentals. So in terms of the natural gas market as of today, January 3rd, 2025, natural gas prices are influenced by high inventory levels, and the incoming administration has pledged to increase oil and gas output, suggesting limited upside potential. For BOIL, seeks to deliver twice the daily performance of natural gas futures due to leverage and volatility decay. It's generally suitable for short-term trading strategies rather than long-term investments. For KOLD, aims for twice the inverse. Daily performance of natural gas futures like BOIL and KOLD is designed for short-term positions, capitalizing on anticipated declines in natural gas prices. UNG tracks the daily price movements of natural gas price. While it offers direct exposure without leverage, investors should be aware of potential issues like contango, which can erode returns over time. The increasing demand for AI data processing is significantly impacting energy consumption. US data centers are projected to consume 224 terawatt hours of electricity in 2025, representing 5.2% of total US power demand. This growth is expected to continue, with consumption reaching 606 terawatts by 2030. Natural gas is anticipated to play a crucial role in meeting this rising energy demand, potentially driving an increase of over 3 billion cubic feet per day by the end of the decade. So first, starting with the natural gas price, we always look at the longer term time frame, so looking at the monthly, the weekly and the daily, depending on what time frame you're trading. So for example, you're trading on the weekly, longer term, we look at the monthly and the weekly, or if you're trading on the shorter term like the daily, we'll look at the daily and the weekly. So same principle applies, and what we do is we look at the price with these moving averages and also the commodity channel index with these moving averages. And if you're new to the channel, these moving averages can be found in the description below, how to create the indicators on your own charting software. So what you look for is, in this case on the monthly, it's broken above the moving averages, giving us a bullish momentum, along with the CCI also above the moving averages. So what you do is when the monthly is broken above the moving average like it is there, you trade on the weekly when it breaks out as well on the weekly time frame. So you would have gone long at that point there, which corresponds with the monthly breakout above the moving average. So you would have gone long there, and what you do is you wait for that moving average, the CCI and the moving average, to break into that moving average range, so long as the price is above the moving average as well. So at the moment, bullish movement on the monthly and also bullish movement on the weekly, and there's no divergence. There was a bearish divergence back here historically, lower points or lower highs on the CCI versus higher highs on the price, and the price fell off. Now we can't tell exactly how far it's going to fall, but what we do, we look at, if I just expand that, what we look at doing is we draw a Fibonacci from that peak, and we take it back to the significant low. You can take it back to that level. I'd like to take it back to a bit more significant point at that level there, and the Fibonacci, we expect it to drop between the 23 and the 38% level, which is, see, that broke right through there. In this case, it came almost all the way down to the 100% level as a retrace, but that's a minimum retrace it does at more than 90% of the time, and other times it may break into that area and bounce, or it could actually fall a lot further like it did in this case, and that's on the weekly. So on the daily, again, bullish movement on the weekly, they're both above the moving averages. Now on the daily, you'll notice here it has been bullish over these periods, but it broke into that moving average range, so you would have been wise to go long on that candle and close it out when the CCI breaks into that moving average range. So it would have been a small gain, if not a break even. Go long again there, and it broke down again into that area there. Now at the moment it's in a neutral positioning, and it's waiting for it to break above that moving average range or below to go short on the lower time frame. What we do is look at the intraday. So we follow if you're trading, this is the 1 hour, so you can interchange this with your own time frame. So if you're trading on the 1 hour, you wait for the daily to break above or below that moving average to go long or short. So at the moment we don't take any trades. Looks like it may well break to the downside possibly, in which case you'll take a short entry, and it's already broken down as you can see. So as soon as that breaks below there, you can actually go short there over the next couple of hours. It's probably going to break to the downside, but again, if it breaks higher on the daily, we go long if you're trading on the daily. In this case on the hourly, we take short positions. So depending on what time frame you're trading is a direction you choose. So for BOIL, On the monthly, it's broken below the moving averages. There's no CCI for it, but that's a very bearish outlook, as you can see. On the daily, we've got a bullish movement on the CCI versus lower lows on the price. It's making some high gains there, but I'd like to see it break a lot higher to be more bullish. And on the daily, it's still bullish, so it has been broken above the bullish mode, so you would have gone long at that point there on that candle. Now in this case it retraced a bit, but the CCI was just skimming above that moving average, and you'd still be in a trade today. Again, wait for it to close out that position on the daily. If you're trading the daily, as soon as that enters into that moving average range of the CCI, it gives you an early exit signal. On the intraday, if you're trading on the intraday time frame, we take long positions only in accordance with the daily time frame. So you would have taken a long position there on that candle there. That was a nice gap up, and you would have closed it out on that candle there because the CCI broke into that moving average range. At the moment, even though the daily is bullish, you don't take long trades until you see that break above that moving average range on the 1 hour. For KOLD, it's bullish on the monthly. There's no CCI for it. Actually, no, it's actually bearish on the monthly. You'll notice that's actually broken below the moving average range. It's a bearish indicator or signal. On the weekly, it has been bullish now for a long period after that bullish divergence, higher lows on the CCI versus lower lows on the price. The price did retrace and made some upside, but now you'll notice on the weekly it's actually broken down below that moving average range, giving us a bearish signal. So if you're trading on the daily, bearish movements only, bearish trades only. And on the daily, you can see there it's actually broken a lot lower, and you would have taken a short position back around that area. When that CCI broke below the weekly, you would have taken a short position, and you'd still be in a trade today on the daily if you're trading the daily. Now, if you're trading on the 1 hour or the intraday, you take short positions only based on the daily. So you would have taken some short positions back here, and at the moment it's broken above the moving average range, giving us a bullish signal. Avoid going short and avoid going long until we see this break. Going long only if the daily breaks higher, but go short again if the 1 hour breaks below that moving average range. So on for UNG, it's still bearish on the price chart on the monthly, but notice it's actually broken higher on the CCI after a very narrow range. So that's a very slight bullish signal, which means you can probably trade on the weekly based on that, but again, very cautiously. I'd like to see this break above the moving average range on the price chart on the monthly. But on the weekly, you can see we had a bullish divergence, higher lows on the CCI versus lower lows on the price, and that price is still declining, although we've had a nice big move there. But again, nothing too dramatic. I'd like to see that break a lot higher, preferably past this previous high there. On the daily, you can see there it's actually in alignment with the weekly. It's bullish movement on the weekly. So you would have taken long trades there if you're trading on the daily. You would have taken a long position on that one, and you'd still be in a trade with that CCI still above the moving average range. Wait for that to break into that moving average to close a position. If you're trading on the intraday time frame, bullish movement on the daily, so long trades only, you would have taken a long position on that candle there, one of those two candles. That would have been a nice gap up, and you would have closed it out on that candle there when its CCI broke into that moving average range. Now at the moment, avoid going long or short because the daily is showing long positions, and on the hourly it's going short. So wait for it to break higher above the moving average range to go long. For it to go short, we want to see this break below that moving average range to go short. So hang on there before we make any decisions on that one on the intraday. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.